Get ready for an insightful weekly Forex market analysis as I dive into the charts and unlock potential trade opportunities for the new week starting on Feb 26th. As usual, let's begin our weekly analysis from dollar index. So moving to dollar index chart. So here what I've done, I've marked the important levels of support and resistance on the daily time frame based on the historical price pattern. And I have also applied the high volume profile tool here. So based on the high volume profile tool, this is the zone where we have, give me a second. So this is the zone where we have high volume concentration, and the second zone of high volume concentration is around this area. Now if I turn it into a line chart, so we have already discussed the same thing in our previous video. So we have bullish divergence, so we have lower low formation along with bullish divergence on histogram, and this is the previous high which is now taken out. So we have the breakout structure. After breakout structure, we anticipate the market will get back or pull back to at least 50 or 61.8 fib retracement area. So here, based on the Fibonacci retracement tool, the 50% area is around 102.58, followed by 61.8, which is again a confluence of high volume zone and 61.8 retracement area, and then we can expect continuation to the upside. So again, the short-term view remains bearish. Now this is purely based on the daily time frame, but if I look into the lower time frame, then we have the market running up. So this could be a short-term pullback, then continuation to the downside. So lower time frame and higher time frame are not in sync. So dollar index is not very clear, but based on daily time frame, the probability is still downwards. So the trend should remain downwards or short-term bearish. Now the next currency pair I'm going to talk about is EURAUD. Now again, based on the higher time frame, moving to the line chart. So if you see, we have the pattern here. So we got bullish divergence on histogram on MACD lines with the breakout structure, followed by higher low formation until this level, and followed by higher high formation along with bearish divergence being formed on the top. So due to this bearish divergence, this currency pair comes into downward pattern. So we have downward correction going on right now, and we can also see that currently it is forming the structure of lower highs and lower lows. So starting from this high, we have a lower high, and again we have another lower high. We have low and lower low. So EURAUD is bearish as per the structure, the price behavior, and it has already completed, it has already formed a falling parallel channel, and right now it has gone back to the high point or the upper boundary of this falling bearish channel. So I'm expecting bearish price action from this level, at least towards this 50% zone, and if it continues further down, then it can also go until 61.8. So as per the price structure and the fib retracement zone, I'm expecting short-term bearish plan. So this was as per the weekly time chart. Now moving to daily, again we have the structure of lower highs and lower lows. So we have high followed by lower high and double top, which is again forming a lower high. We have low and lower low. If you notice, between the last two lows, if I'm comparing these two lows, we have a lower low formation. We also have lower low formation on MACD lines, and we also have lower low formation on histogram. So I'm expecting continuation to the downside, and right now it looks quite bearish. based on the candle pattern, we have a minor support in this area. Once this support is broken, I can expect continuation to the downside. So the plan for Euro AUD is to sell on the rise. Moving down to 4-hourly chart. Again, it's consolidating right now. It's very close, or in fact it has retested the upper boundary of the falling channel which was formed on daily chart, and still we can see that it has not been able to create a higher high after this high. So this high is the short-term invalidation in the sell plan. If we get a break above this level, then the bearish plan should be scrapped. So until this high remains intact, we should look for sell on the rise. So this is the plan for Euro AUD. Look for sell on the rise. Now the next currency pair is Euro versus Pound. Now going back to daily. Now based on daily, I have taken into account this high followed by the new lower high, lower high, lower high. So we have a sequence, we have a series of lower highs being formed on the daily price chart. Also we have lower lows being formed here. So this was the area where we had triple bottom with some bullish divergence, which has given this short-term pullback. And again, starting from this high, we have lower low formation. And right now, I don't see formation of higher highs on this currency pair. So zooming in, we have high, we have lower high, another lower high, lower high. So this high is not yet broken, followed by lows, lower lows, and lower lows. So we had some bullish divergence here around this area, also between the last two lows, but it has not formed the higher high pattern here. In fact, it has been rejected from this resistance area. So applying the Fibonacci retracement, starting from previous high until this low point, this currency pair has retraced precisely towards 38% and started moving downwards. So EURGBP looks bearish to me. So what I've done here, I've applied Fib retracement on the daily downward cycles. So the first cycle which I've taken into account is here. So first cycle, Fib expansion applied to the downside, the second Fib expansion applied to the downside, and the confluence is here. So this is the confluence zone. So I'm expecting Euro Pound to reach the price level of 0.8387 to 0.8362 in the near term. So Euro Pound, look for selling opportunities only. Now the next currency pair is New Zealand versus CAD. Now throughout the week, New Zealand remains really strong. Now based on the fundamental factors, I'll take you to the economic calendar. So for the upcoming week, we have a very important announcement coming from the Reserve Bank of New Zealand. So we have interest rate decision which is due on Feb 28. Although we are not expecting any change in the rate of interest, but I can expect that New Zealand dollar will remain strong until this announcement. And once we have the formal announcement in place, I can expect that New Zealand dollar will start moving downwards. So until Feb 28th, I can expect short-term bullish, and then I can expect the market will change from bullish to bearish. Now let's move to the charts. So going back on the line chart basis on daily pattern. So what I've done here, so this was the bullish divergence which was formed long ago. We got the break of structure, massive bull run, and since then it's been in the downward pattern. Finally, we got bullish divergence again with the lower low formation and the break of structure. So I have applied first Fib extension to the upside on the cycle starting from this area. So this is our first leg up, second down, this is the impulsive third leg, and fourth wave down. Now finally we are in the fifth bullish wave. So based on the duplication of Fib extension cycles, the first magnet zone is 0.618 and 1.618. So this is the level of 0.8421, followed by the completion of two upside cycles would be around this area. So 0.8511 to 0.8590. Currently we are at 0.8363. So there is a good potential that even if you're targeting the first level of magnet zone, the Fibonacci extensions based on the two upward cycles, then you can target at least 0.8421. If it continues further up, the next target would be 0.8511 to 0.8590. So based on daily chart, I do not see any signs of slowdown. So price is moving up fast and clearly, and there is no divergence being formed on histogram or MACD lines either. Based on 4-hourly chart, I can see the pattern of higher highs and higher lows. So here we have a low, higher low, followed by next higher low and next higher low. We also have the sequence of high and higher high. I do not see divergence being formed on 4-hourly chart, so which means that the bull run should continue. So here we are now in the phase of consolidation. So once this consolidation is over, or maybe a short-term downward correction, I've also applied a rising trend line here. We can expect the bullish continuation at least towards 0.8407 to 0.8421. So the plan is, if you get an opportunity, if you get the discount during the upcoming week, you should plan to buy somewhere around this area with the stop loss below the rising trend line. And this is also a high volume zone, and this is the previous resistance, which should now serve like support. So I have taken the stop loss slightly lower with this target, and we are easily making 2 times reward here. So the risk to reward ratio is favorable, and the plan is to look for short-term buying opportunity only. When the formal announcement will be done regarding the rate of interest, I can expect that this bull run will be completed, the 5-leg structure will be completed, and a short-term pullback is highly anticipated at the time of announcement or after the announcement. And the last instrument for the week is gold. Now based on daily chart, I can see that we have the pattern of low, higher low, higher low, and we have the pattern of high, higher high, and equal high, followed by double top here. So high, low, and lower low. Now it's rising sharply, and this is the first point of resistance. That's around 2035, the current level, and if this is broken, then the next major resistance is at 2057, which is also the Fibonacci number. So I've applied Fib retracement from this low, which was at 1809, to the highest point, that's 2134 or 2135 in round number, and the market has honored 50% retracement level. In fact, it has not even retested this level, and it has bounced back very sharply. So the next major resistance level is 2057. So until dollar remains under pressure, I can expect that gold to reach at least 2057, and if it crosses above 2057, then the bull run should continue to the next level. Now based on 4-hourly chart, there are no signs of reversal, so I do not see any bearish divergence right now. So MACD is still rising. I do not see the bearish cross of the MACD lines, and it has given the new breakout structure here. So based on a line chart, we got the new breakout structure here with the low being formed at 2020. So I'm expecting that gold is not going to break below 2010 or 2009. So until it remains above 2010 or 2009, which is again calculated on the basis of Fib levels, I'm expecting the next target to be 2057. So we should plan to buy on the dips. So this is how we can approach. We can apply Fib retracement on the recent most cycle, and we can expect to enter into a bull trade, a buy trade somewhere around this 50 to 60% area. So any chance, any opportunity you will get during the trading week, the upcoming week, when gold reaches around 2028 to 2025, grab it and go for the buy trade with stop loss below 2009 and target 2057. So this is the trading plan for upcoming week. I hope I have added value for the upcoming week and my technical analysis is clear. If you still have any doubts, you can get back to me or you can DM your favorite instruments and I'll be happy to revert back with my technical analysis. Have a profitable trading week ahead. Bye bye.